So let's talk about money. For so many people, it's this big, scary, complicated topic that we're just supposed to magically understand. But the truth is, nobody is born knowing how a 401k works or what APR even stands for. I certainly wasn't. I had to learn everything from the ground up, making a ton of mistakes along the way. And honestly, it felt overwhelming. It felt like trying to learn a new language with no textbook. But here's the thing. Once you start to grasp the basic vocabulary, the entire world of personal finance begins to open up, and it's not nearly as intimidating as it seems. It's actually empowering. That's why I wanted to make this video. My goal is to break down the fundamental building blocks of finance into simple, easy-to-understand pieces. We're going to go through 37 essential money terms one by one with no complicated jargon or confusing charts. Think of this as your personal finance dictionary, the ultimate beginner's guide to getting your money right. We're going to cover everything from the absolute basics, like what a budget is, all the way to investing concepts and how to protect yourself from scams. By the end of this, you'll have a solid foundation that will help you make smarter decisions, feel more confident about your financial future, and start building real, lasting wealth. It doesn't matter if you're a student just starting your career, or you've just never had this stuff explained properly. This video is for you. So grab a coffee, get comfortable, and let's start mastering your money together. And as always, make sure to smash the like button for the YouTube algorithm. Let's get into it.
A plan for how you will spend your money. Money you earn from work, investments, or other sources. Something you spend money on, like rent or food. So savings is basically money you set aside instead of spending it now. An emergency fund is saving specifically for unexpected costs, like say a car repair. A checking account is a bank account for your daily spending and bill payments. So, a savings account is basically a bank account where you store money to grow. Credit. Well, that's borrowing money that you promise to pay back later. A credit score is a number showing lenders how trustworthy you are with debt. So, an interest rate is basically the extra cost of borrowing or, the reward for saving. The APR or annual percentage rate is just the yearly interest rate you pay on a loan. Debt is, well, money that you owe to another person or institution. So a loan is basically a sum of money borrowed that must be repaid. An asset is something you own that has value, like, for example, a house. A liability is something you owe, such as a mortgage or a car loan. So your net worth is basically your assets minus your liabilities. It's like your financial snapshot, A stock is, well, just a small piece of ownership in a public company. A bond is a loan you give to a government or company. So, diversification is really just spreading investments around to reduce your overall risk. Compound interest? Well, that's earning interest on your money and also on your interest. Gross income means your total earnings before any taxes or deductions are taken out. So, your actual take-home pay after all deductions are made is called your net income. Payroll deductions are basically money taken from your paycheck for taxes and benefits. A W-2 is, a tax form from your employer showing your earnings. So, an entrepreneur is someone who starts and runs their own business venture. Basically, insurance is a protection plan you buy against financial loss. And well, a premium is the regular payment you make to keep your insurance active. So, a deductible is, well, the amount you pay before your insurance starts paying. Taxable income is basically the portion of your income that is subject to tax. Sales tax is, a tax added to the price of goods and services. So, property tax is basically a tax paid by property owners to local governments. The IRS, or Internal Revenue Service, is the United States government agency that, collects federal taxes. A financial goal is, well, a specific money target you are working to achieve. So, needs are essential for survival, while wants are really just for comfort. Opportunity cost is basically what you give up when you choose something else. Inflation is the rate at which prices rise and, well, money loses value over time. Scams and fraud are dishonest schemes designed to steal your money or information, plain and simple. And there you have it. 37 fundamental financial terms that form the bedrock of personal finance. I know that was a lot of information to take in all at once, almost like a fire hose of facts. But my hope is that by breaking each concept down into a simple, bite-sized piece, it feels much more manageable. The goal here isn't to become an expert overnight. The goal is to build a foundation, to plant the seeds of financial literacy so that you can navigate your own financial journey with more confidence and less anxiety. This is the language of money, and now you can speak it. Remember, every single person who is successful with money started exactly where you are now, at the beginning. They learned what a budget was, they figured out compound interest, and they made a plan. The only difference between them and someone who struggles is that they took the first step, and then the next one. This video was your first step. Your next step is to take one of these concepts, maybe starting a budget or calculating your net worth, and apply it to your own life this week. Small, consistent actions are what lead to massive results over time. Thank you so much for sticking with me through all of that. If you found this video helpful and learned at least one new thing, do me a huge favor and hit the like button. It really helps the channel out. And make sure to subscribe and hit the notification bell so you don't miss future videos where we'll dive deeper into these topics. Let me know in the comments which term was most helpful for you to learn. Thanks again for watching, and I'll see you in the next